Hello everyone. Welcome to a new week of Rushing, simplified news for busy investors. Made by a woman for busy investors everywhere. Clear headlines, quick context, and only what truly moves capital markets. Let's dive into the 5 stories moving the world's money. First headline. AI valuation collapse drags Nasdaq into correction. What does it mean? The Nasdaq logged its worst week since April, down 3%, as investors finally questioned stretched AI valuations. Palantir beat earnings yet dropped 9%. Uber also beat but sold off, proof that good news isn't good enough anymore. Why magnify it? This marks a psychological shift, from buying hype to demanding sustainable cash flow. The AI trade that powered 2025's rally is finally being stress-tested by valuation math. Possible affected sectors: semiconductors, software, AI infrastructure, growth ETFs, and leveraged tech funds. Second headline. Tesla's $1 trillion compensation plan backfires. What does it mean? Shareholders approved Elon Musk's record $1 trillion compensation package with 75% support, yet Tesla's stock fell 3.7% immediately after. The vote highlights the gap between retail enthusiasm and institutional caution. Why magnify it? When a $1 trillion pay package can't lift sentiment, it signals exhaustion in one of the market's biggest cult trades. Institutions are focusing on execution, not headlines. Possible affected sectors: electric vehicles, auto suppliers, clean energy ETFs, and megacap momentum stocks. Third headline. U.S. government shutdown hits day 35. Longest ever. What does it mean? The shutdown tied the record length, freezing data releases and paralyzing federal functions. Market participants are trading blind on macro data, while small business sentiment and consumer activity hit multi-year lows. Why magnify it? When Washington stops printing data, traders fly without instruments. That raises volatility and distorts rate and inflation expectations. Possible affected sectors: treasuries, defense contractors, consumer discretionary, and domestic transportation. Fourth headline. Consumer sentiment collapses to near record lows. What does it mean? The University of Michigan Sentiment Index plunged to 50.3, the second lowest reading in history. Consumers see prices rising faster than wages, directly contradicting the optimistic market narrative. Why magnify it? Markets trade on confidence as much as data. A collapse in sentiment while stocks sit near highs hints at serious divergence, a classic pre-repricing signal. Possible affected sectors: retail, consumer discretionary, financials, and small caps tied to domestic demand. Fifth headline. Fed turns hawkish. December cuts off the table. What does it mean? Fed officials publicly pushed back against expectations of a December rate cut, emphasizing inflation's persistence and strong GDP growth. Yields spiked, wiping out hopes of another easing move this year. Why magnify it? This pivot ends the easy Fed narrative. High multiple sectors face renewed pressure, and investors are rethinking 2020's rate path in real time. Possible affected sectors: bonds, growth equities, REITs, utilities, and rate-sensitive tech names. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with people to help them too. Links to all socials and the written brief are in the description. Thanks for listening to Rushing, your daily fastest financial source of news before the market opens.